So we have the banking system meltdown. That will cause more bank runs and more meltdowns, but riddle me this, Batman. The Federal Reserve has roughly over, give or take, $1 trillion of unrealized losses on their balance sheet. And it's currently operating at a loss. Cue the fire 3 times. But people still, your banks, still are borrowing from this insolvent piece of... That should cut it. And now they're saying we need emergency measures to stop this, which I am going to pull out my crystal balls. We're going to go in the future. We're going to go now, future, and we're going to look at how does this get solved, which you're not going to like this. And what you would like to see from any balance sheet, whether it be Bank of America or you want to see assets and liabilities, equal out. You don't want to have too many liabilities because then you're broke. And as we can see with the Fed's balance sheet, okay, it's kind of lined up with assets and liabilities until we go to the next chart. Liabilities and capital and liabilities. Never seen before in the history of anything. So now you have the Fed at about roughly over or above $1 trillion upside down. And Janet over there wants her money back. And Jerome's like, can I write an IOU? That's what their remittances. They just write like on a sheet of paper, like, yeah, we promise when we do become profitable, we will pay you back. And also for those of you that are like, this just all doesn't make sense to me. Trust me, I go really deep down the rabbit holes. And at the end of the day, it's just one gigantic Ponzi scheme. Well, unless you don't think that this system, here, I'll give you an example of the Fed and your own bank. You walk into a bank, it has no money and nothing in it. Just a guy named Larry behind the counter. And you're like, can I have $1 million? Larry's like, sure. Writes down on a sheet of paper. What did I say, $1 million? Just go with $1 trillion, doesn't matter. Here's $1 trillion, hands it to you, deposit in your bank. Poof. $1 trillion. Now, the question is, did Larry have $1 trillion to start with? The answer is no. But now Larry, the bankster, has $1 trillion asset on his balance sheet. It's a liability to you because you got to pay it back with interest. And the same thing is with the Fed. You just have to go over there. Now, I would like to be a bank. And well, actually, I want to be the Fed. You know what? I'll take either. I'll take a bank or the Fed. I could just loan nothing out of thin air and make interest. This is amazing. But the question is, what happens when people wake up? Like how this entire system is created. And what you're seeing above my head is when this is, here's the Fed's balance sheet, which was actually going down. And we were all excited to see all of these bonds maturing and rolling over. Well, until we had a little banking crisis that's just the beginning. All of these banks ran to one another saying, can you loan me? I need collateral. I need cash. No. They got turned down. So then they went to the Fed and they said, please, Fed, can we have some? That was that discount. See that big black line that goes off into the universe? That's because we're in a tightening cycle and there's no collateral and it's a big fluster cluck. And then my question is, why didn't they run to the discount window in the first place? No, they're just like, that's it. We're out. Bankrupt, gone, kaput. So then I always have a lot of questions. I'm like, why did they let those fail and not those fail? Why is the Fed doing this and not that? And then I realized at the end of the day, oh, maybe they just want to consolidate, right? Maybe like take 5 big banks that you can completely control. But anywho, whatever. This is a great movie. I just want to see the ending. Also, I'm kind of excited that line is starting to go down. I mean, it really didn't take much. And if I pull back and let you look at it about the take, not much, it really didn't. It's not like a little bit, right? This is so sad. It's like Fed tightening, oh, we got this. Nope, we don't got this. Like, that's it. Just a few billion. That's all they could tighten. And everything just goes off the charts. My big question is like, when this all ends, right? How bad is it going to be? I think it's going to be nuclear. It's going to be so bad. And imagine when we finally get to my white line, when the Fed tightening actually has something to do with something and things actually should start breaking then, not now. I think things could get really bad. So I hope you have fresh water. But Fed's emergency loan to banks, I'm going to give you guys some good news. fall. Whew, bravo. It's all over. You can go back home. Everything is okay. You can actually stop filming videos because it's Easter. And correction, Good Friday. Why do you call that good? You kill this guy named Joshua. I'm just trying to make it chill here. Yoshua or Jesus. The guy does nothing wrong his whole life, and we kill him and throw him in a grave. My question is, how is that good? To me, that would be bad. That would be like Bad Friday. And then my next question, cue the fire. Am I held responsible for this? And if by any chance I am held responsible for this, I hope it's not bad. Probably not as bad as, that was a big screw up. Wouldn't you say? The textbook, bad screw up. Probably worse than the Fed. But coming back to the Fed discount, look, we've solved it. It's coming down. Not so many banks are freaking out. Fed discount window borrowing eases. I'm sure this will be the last that we see of those little bumps. I mean, I'm pretty sure, cue the fire, 9th time that the Fed fixed it. That they got the tools, everything is fixed, and the answer is no. Nothing has been fixed. Nothing has been solved. That was just the beginning. And just in case you want to know what would fix it, if the Fed, which is insolvent by $1 trillion, would go, you know what? We're not going to give you 5%. No, we're going to give you 0. But they're not doing that. Also, this is like a guarantee, even though nothing is guaranteed in life. 5 to 7%, some, corporate bonds, whatever, close AAA rating, you get 7 or 8%, but just right from the Fed, even a CD is paying over 5%. And all these things go right off that's called a bank run. They go right off of the balance sheet, okay? And it goes right onto the Feds, and then they have to pay interest, which they're in trouble right now. Also, for those of you that think, you know what? I'm going to put all my money in equities. That would be the stock market. Just think about this. Another riddle me this, Batman. You're going to make roughly 9%, 10%. I mean, last year you were down almost 20%. I mean, the bond market did not do too well either. That was the only one who did well was my swing traders. And pop the confetti, that's when you get in, you get out. You get in, you get out. It's just not this hodl game, which is going to catch a lot of people on the wrong side of this. Could be for 30 years. I mean, Nikkei, they're still waiting for the 80s to happen just to break even again. They probably won't, because that would be called resistance, and everyone and their mother that has been hodling for over 30 years, they're going to push the sell button. And also, for some reason, if you're like, I'm going all in on the stock market, probably not wisdom there if we are in a recession or going into a recession. That means, historically, going back 100 and something years, you will be down somewhere. I mean, you thought 20% was bad last year. You will be down somewhere between 5%, 80%. I mean, Great Depression was 80%. The GFC was actually closer to 80%. That was just feels recently to me. Great Depression was closer to 90%. I think that one tacked on 89%. So now let's circle back. Are we all going to go into equities right now with these kind of percentages? Probably not. Are we going to take our 5 to 6% parked at the Fed? Basically screws up everything that they're trying to do, but they screwed it the pooch first. Before I forget, let me do a sale because it's Easter. Okay, here we go again. I'm corrected. It's Good Friday. But I'm going to do a one-day Easter sale. All of my courses, $297. And that would be if you want my swing trading one, my bear market one. And I would say, start with swing trading, please. Start, you get the basics there. And then you could go, what's this? Oh, it's a triangle. What's the triangle going to do? I'm going to bet it's going to break down. It's okay, because I can use my swing trading ability and make money on the swing trade, which I just did, and I closed it Friday. Wait, no, the market's closed today. Yesterday, I don't know. Take profit. And if you want to know why I see these lines, the support, I think it was going to get rejected. And it did. So I took my profit. If you want to come down, okay, I'm going to then take a short out down, come down here and retest that little white line down there, okay, or the 200, okay? And then if it swings straight, I'll make money up again. And also, before I forget, no sale on my watch list ever. This one, $20 a month. That's it. What is that, like 50 cents at 70s? I don't know. A day. That is so nothing. What did we do? Good Friday. We're closed today. I'll give you a sneak little peek, sir, on what I do. Microsoft. See, I put everything that I am trading in a watch list. So grab that too if you want it before that goes up to 30. That's up to you. Microsoft. Look. See that? It's in a channel. What do I think it's going to do? Probably get rejected. See, you just need to understand lines. We got CELH, rejection. That would be a bear rejection. What do we got? AMAT. Look. You see that? It's a wedge. It's a rising wedge, and it broke. Aren't these fun? Even Costco, look, and it's another wedge. It just keeps going. CR, I got this all day long. Or you could, I use everything. And then you could use it, but then I come back and I teach you this in the S&P 500. And we come together as a family to try to figure this out. Kind of like, how do you have Good Friday that should be called Bad Friday? And then you're like, well, this Jesus guy, and then somehow we have an Easter bunny that poops out golden eggs. Well, actually, any eggs are very expensive right now, so I would call them all golden. If you guys have eggs, congratulations, you are rich. Also, just to let you know, I might go back in on that trade. On a swing trade, it's the Bravo 9. It's that red line right there. You swing it up, you put in a buy, which I did on this channel. We were on the 200. We wrote it up, but then I think we're going to hit our head on that white line, which we did. But if you want to know if I would enter, I want to get above that white line. I want to retest it like that, and then I want to head higher. Now, it won't be an arrow like that, so don't be confused. But you start movement to the downside, which if I see that on the MACD, it's going to look like this right here. I'm going to put in a short. You see, that's how we do it. I can't go over there, but it's kind of over that way. That would be a short to the downside. And then you put in a buy, and then you put in a sell. Or you could sell, right? And then you click sell again. It's the short, and you make money down, and you make money up, and you make money down. You guys, I'm trying to make this so easy for you, and this is what I do. And some of you guys are like, it's not that easy. Well, I'm just going to keep doing it with the S&P 500, and let's see. I mean, I went back. You're right, 61% just by doing my bear market, my swing trade, without trying to cherry pick. I swear, I'm just going to keep going, and let's see if I can keep this train moving. And I know the internet's forever, so I cannot tell a lie. And also, real quick, I'm going to make it super brief on you on Bitcoin, because you guys have been asking. So I'm like, okay, I'll squeeze in 30 seconds on you. We're at 27.9. I think it's going to break lower. Big picture, I think we're going a lot lower, but that's recession, all that kind of stuff. But I think there's a probability of up. It's up, down. So I'm sorry, you're confused, because if you're not a trader, you're like, what is he even saying? You have negative divergence here on the MACD. See that? It was flat. See, it went flat, sold off. I believe that's what's going to happen. How low? I'll show you. Another one. Same thing as back there. Always. Also, we popped out of, remember, that was that wedge, that falling wedge. I said it's going to pop. It did. It jumped up. I closed. I took my profit. Went sideways, whatever. You're beating your head up against that, 28.5. It's not getting above it. It's kind of like big, thick ice. You'd find this in my crypto course, and you can't get above it. You just drown. Okay. So it's going to come down, and it's going to find support. Where is it going to find support? First, it's going to be the 21 EMA. That's going to be your yellow line. The next one that it will find support, let me give you a bunch of lines. We're also above when it splits, those ribbons split and head higher. That means bull. Yay, bull. And we are above. We're above. See, we're above the yellow. All right. So I think retest there. If not, retest about 25,000. So if you're just like, you know what, I don't even care, I'm going to get in, that's a level. And then support is going to be 200 or the 200 week, which is going to be, let me show you, 200 week is going to be right there. It's in one of those red. That's going to find its support, which I just said that it would find support at 25, which would be your 200 and your 200 day, which comes in quite a bit lower. That is way down there. So I hope this helps. Now back to regularly scheduled content. Getting back to you guys saying like, you can't time the market, you can't always get it. I'm going to say you can get pretty close. I really believe this. I've actually had Jesse on. So a friend, a good acquaintance, he actually wrote a blog article, which I really like. Who says you can't time the market? Part 2. I think you can. And there's also market cycles. Inflation, disinflation, deflation, MACD here, MACD there. You just have to follow it. And then you could even go out on limbs and create a YouTube channel and say, hey, on February 17th, I'm going to short this thing called SIVB at over $300 a share. And some would just call it pure luck or good looks. I'm going to go with the good looks. But, okay, so if you don't, what do you do, though, in all of this, in this entire world, which I would consider this entire thing to be welcome to our clown show, which nothing makes sense except for you going, well, it makes sense to you, right? Because this is how it works, and this is what's going to happen. And you only live one life, and you don't have to listen to anyone. Just figure this out and live a great life by starting businesses, trading equities, doing whatever you want to do. I just want you to live your best life now. Now, after this life, I can't help you with that one. Well, except for life does leave clues. So make sure you're on the lookout to figuring out actually what does happen when the lights go out. But like always, you guys, I love you. I hope I am guiding you in the right direction. I hope. I don't want to lead you guys down the wrong one. That just makes me that's painful. Especially when you guys see me out in the community. That could be rather scary. Tonight, Chris Tucker live, ACL. If I see you, if you're there and you see me, come up and say hi. Also, say hello to my wife. She is not as bad as I make her out to be. She does spend a lot of money, though. Again, I cannot lie. It's Bad Friday. But love you guys, and I will see you tomorrow because I work every single day of my life, even though I don't have to.